Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss an index that offers investors a differentiated approach to tracking companies that are attractive based on their free cash flow. Mark, it's great to see you as always. Welcome back to Trade Talks. Let's talk about the composition and give us an insight into some of the holdings with this index.
Thanks, Jill. Great to be back. And yeah, the Nasdaq US Free Cash Flow Achievers Index launched a little under 2 months ago, towards the end of October. We've already got a tracking product from Invesco. The ticker is COWS with a Q, so QOWZ. That officially launched last week. And if you're familiar with our suite of sort of dividend and income strategies, we have this sort of achiever suite, this approach to building dividend indexes on the basis of long history, long track record of stable and growing dividends. We kind of took the same idea and applied it to the free cash flow space, which has seen quite a bit of success over the last few years. Excuse me. On the back of investors in a time of rising rates and inflation, really focusing their attention to companies that are free cash flow positive and growing in terms of cash flow. The general approach there has been to focus on the highest free cash flow yielders. We took a slightly different approach here, right? We're looking at around a decade of history to select companies that have consistently positive free cash flow and also fairly stable year-over-year growth in free cash flow. And so that gives you an index that, maybe somewhat surprisingly, especially when you start comparing to some of the other products that are out there, is currently just over 50% exposed to tech, and has a good number of sort of tech heavyweights in the top of its ranks in terms of the holdings. You see NVIDIA there at the very top, just under 10% weight. That's the single security cap for this index. And then you've also got other names like Broadcom, Adobe, Salesforce in the top 10 that have done a really, really superb job over the past decade plus at staying cash flow positive and growing that free cash flow year over year.
And let's talk about the methodology behind the index.
Yeah, so this is a U.S. Index, and we start out with the base universe of the Nasdaq U.S. benchmark. So basically, the 3,000 largest companies in the U.S. We screen those companies all on 11 years worth of free cash flow data. So for the full calendar year, going back 11 years, to make it to the next step of the screening process, you've got to be positive free cash flow in all 11 of those years. And we also screen out any financials, banks, real estate type of companies. That gets you from about 3,000 down to about 500 eligible companies. And then from there, we select the top 50 based on free cash flow growth consistency. So there aren't that many companies that will grow their cash flow 10 out of 10 years in this 11-year period. Those automatically get in. There's some that grow 9 out of 10 years. There's a few more that grow 8 out of 10. It's those companies that really are, if not every single year, growing free cash flow almost every single year. We use 3-year free cash flow CAGR as a tiebreaker to kind of break ties as you work your way down in those year counts. That's how you get to that final basket of 50 free cash flow achievers.
And Mark, what if you compare the index to an ETF such as COWS, COWZ?
Yeah, so COWS is really the heavy hitter here. They've had the most success in growing assets. There's a number of sort of copycat products out on the market now. So this is not to single out COWS. This is really comparing against what the dominant approach has been out in the ETF market and in terms of working with indexers like Nasdaq to develop these free cash flow strategies. And those really, again, focused on the highest yielding companies over a single period. So it's similar to the concept of, screening for highest dividend yield, right? And that introduces, a couple of potential issues in terms of, how sustainable is it? Is your yield currently really good, really high seeming because your stock is down 50% over the last year? and all of a sudden you have same or similar cash flow as you did prior year, but your yield has gone up by a factor of 2x just because your price moved in a negative fashion, right? Are you yielding a lot right now because you're in an industry that has a cyclical upturn like energy has had recently, right? And that is going to potentially revert in the next few years as that industry goes into its next cycle. These are all the things sort of that, looking at point in time snapshots of yield, whether it's free cash flow, whether it's dividend, whether it's, shareholder yield, things that can be a little bit misleading if you're trying to build a sustainable long-term strategy. And so that's why, again, we decided to take this approach of looking at a long period of history to find those companies that are consistently free cash flow positive. They have consistent or nearly consistent growth and fairly stable growth. And that leads you to have, an overall for this product, overall lower free cash flow yield than cows and a lot of those other copycat products. And, in terms of the style exposure, way more weighted towards the growth and large cap segment of the market. If you see that blue dot there in the chart on the right, something like cows is in the bottom right, not as large cap oriented and definitely not as growth oriented, way more of a value exposure there. And that leads to some interesting differences in performance year over year, as we'll see.
Yeah, which is so interesting with what your team does by finding these innovative solutions and methodologies within the index space, Mark. And let's talk about that. You mentioned the product's just about 2 months old. Is there a way or metric to compare performance to its competitors?
Yeah, so just like most indexes that we launch, we do a pretty rigorous back test, and try to have at least 7 to 10 years of history, sometimes more. So for fairly straightforward strategies like this, I think it's not a stretch to try to glean some insights around historical back tested performance. And so what you see here is really a tale of 2 years, right? On the left, you've got year-to-date 2023, that's as of yesterday's close. This strategy, the Nasdaq Free Cash Flow Achiever, is up over 44% year-to-date. And that is, really largely driven by a lot of that tech outperformance that we're seeing with names like NVIDIA and Broadcom, Adobe, and some of the smaller ones. This is very, very similar performance to what you're seeing with the Nasdaq 100 year-to-date. If you look at all the other strategies that we've listed here, not just cows, but also Victory, free cash flow, as well as from Global X. Those are all pretty similar, right? Those are trailing in a pretty big way year to date because it's just a very different exposure, way less tech, way less growth, way more value oriented exposure in industries like consumer, staples, and industrials. If you look on the right, very different story last year, right? This strategy was down, although not nearly down as much as the Nasdaq 100, down only 23% last year, kind of in line with this other pacer product, which is the cash cows growth strategy with the ticker bull. And then you see some of those other products, they did have a decent 2022, right, when the market was broadly down. But really more than being made up with the outperformance that we're seeing this year from this product. That's why we're very excited to sort of offer investors what we think is the best of both worlds here. You've got that focus on free cash flow, as if that's what you want your portfolio to be tilted towards over the coming years. But you don't lose out on some of that, high growth, high fundamental strength exposure that does exist in tech and some of those tech adjacent sectors. So again, that's why we're very excited to see this product not just launch as an index, but also have a tradable tracking product out there from Invesco.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.